Hey there YouTube. So for this video I wanted to cover real estate property taxes versus just general property taxes. What's the distinction between the two? How do you approach each for federal income tax purposes as far as what's deductible? So I've got one slide in front of us here, and then I've got a sample property tax bill and a Schedule A that we'll look at when we actually dive into what is tax deductible from a property tax perspective and then a real estate property tax perspective. So if I go back to the slide here, we'll go through the slide and then jump into the example Schedule A at the end there. So the question posed is, are real estate taxes the same as property taxes, and what's deductible? Well, yes and no, right? So real estate taxes are a specific type of property tax, and it's a tax that's leveled upon real property assets. So when we're thinking about property from a federal tax perspective, it's basically branches off into two areas, right? So we have personal property and then real property. So real property are single family homes, commercial buildings, apartment buildings, things like that. Personal property is more is then further broken down into tangible and intangible property. So personal property that's tangible would be machinery, equipment, cars, office furniture, things like that. And then you'd have intangible property like goodwill, intellectual property, things of that nature, right? So for an individual taxpayer that's filing 1040, you're allowed to deduct your real property taxes as an itemized tax deduction, and you're also allowed to deduct personal property taxes. For the personal property tax piece, most commonly we see it deducted for your vehicles. So if you live in a state that assesses property taxes on the vehicle based on the value of the property, so that's referred to ad valorem taxes, you can deduct that personal property tax on your Schedule A. Now, here's where we have to make the distinction between personal property tax and real estate. Now, under federal tax rules, across both, you can only deduct the ad valorem portion of your bill. Okay, so ad valorem tax means it's a tax calculated based on the value of the property itself. Okay, versus non-ad valorem is a tax assessed on the property, but it's not connected with the value of the property. It has more to do with kind of where the property is situated. And when we look at the property tax bill later, I'll explain what some examples of what we mean by that. So, and this is all in the regs. So in 164-3B, real property taxes means the tax imposed on an interest in real property and levied for the general public welfare, but it does not include taxes assessed against local benefits. That's the non-ad valorem portion, right? The against local benefits piece, right? So taxes for local benefits include streets, sidewalks, other improvements that are around your real property. And so because you inure a direct or indirect benefit from these, they are not deductible. It's just the ad valorem piece that's tax deductible. So if we look at an example of a property tax bill, and then we'll look at Schedule A, we'll go to the property tax bill here first. So this is a sample bill, a fake bill from Sarasota County, Florida. We have a breakout of the ad valorem and non-ad valorem assessments. Right, so if you look at the property tax bill, they all look pretty similar. You'll have your own account number, where's the property address, what's the tax year, and then this is where we get the breakout. So ad valorem taxes, and then down here we have the non-ad valorem assessments. So ad valorem taxes, these are the components of the tax against your assessed value of the property that go to the general welfare of the public, right? So this is why it's a ad valorem assessment, because it's based on the assessed value and it's going to the general welfare of the public. So this piece of the tax here, the $1,213, this is the piece that's tax deductible, okay? The non-ad valorem piece, again, under the rules, is not tax deductible. So for this homeowner, their total taxes and assessments is $2,142. That's the check that they're going to cut to the government. But this is not the piece that's deductible. It's only the ad valorem piece. So if we look at non-ad valorem assessments, again, you notice here that there's no computation based on assessed value. Right, these are fees that are assessed almost on a per property basis, depending on how many properties are within that neighborhood. You see this very common in deed restricted neighborhoods. because there's a non-ad valorem assessment. Everybody's splitting it equally. So like Sarasota County Fire and Rescue, waste management, sewer, stormwater utilities. These are components that are unique to that property in that neighborhood. And so that's why, again, it's a non-ad valorem assessment, because everybody is sharing in it depending on how many properties are within that neighborhood. Right, so that's why very, very important not to deduct the whole thing. I do see it deducted in its entirety very often, and it's quite frankly, it's just wrong. Right, you're only allowed to deduct the ad valorem piece. So if we look at a Schedule A sample here, we have John S. taxpayer. He's itemizing his deductions this year, so he's not filing the standard. So if we look at taxes paid by you, right, in this section, lines 5 through 7. The state and local personal property tax at $250, that's the taxes he paid on his vehicle, right? So that's the ad valorem tax assessed on the personal property, his vehicle. And then if we look, excuse me, if we look at the state and local real estate taxes, line 5B, that's the $1,214, right? So he's only allowed to deduct the ad valorem portion here, $1,214. The non-ad valorem portion is left off of this schedule, right? He cannot deduct it. So, yeah, so that's, let me move back to the slide really quickly here, just make sure we covered everything. Oops. Okay, so again, just to recap, property tax bills, pay close attention to the breakout of ad valorem and non-ad valorem portion, again, because non-ad valorem is not deductible. And these are the relevant sources in the Treasury regs if you actually want to go dive in there and look these up. But yeah, again, so personal property taxes, again, as long as it's always assessed on the value of the vehicle, so it's not like fixed fees, you can deduct those. And then when it comes to real property, you've got to separate the two, right? What portion is ad valorem versus non, and you can deduct the ad valorem piece. Okay, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again soon. Thank you.